Every single time there's a bull market, there's just more and more innovation and more use cases and more people and types of people that crypto is touching. I think the only way that you stay in this thing, you have to be mission driven. Like, what are you doing this for? For me, it's not about money. For me, it's about changing the world.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic from 4RC. Today's episode is jam-packed with insights from someone who's been investing in crypto startups for over 10 years at the legendary crypto VC firm, Pantera Capital. Pantera has backed more than 100 blockchain companies and 110 early-stage token deals since 2013. In this episode, managing partner Paul Veradittakit joins us to share why he's so bullish on a number of sectors, including Bitcoin DeFi, decentralized social, modular blockchains and zero-knowledge proofs, crypto AI applications including DePIN, and institutions tokenizing assets on-chain. But before we do, just a quick word from our sponsors who make the Edge Podcast possible.
Introducing the MANTLE liquid staking protocol, MANTLE LSP, a permissionless, non-custodial ETH liquid staking protocol deployed on Ethereum L1 and governed by MANTLE. With MANTLE LSP, users can stake ETH to instantly receive METH, earn yield and accumulate rewards the longer you stake. METH is the value accumulating receipt token that will give you access to expanded yield opportunities. Stake and watch your yield grow with MANTLE LSP.
Introducing RSWETH by SWELL Network, a native liquid restaking token that gives you access to the EigenLayer ecosystem. Earn pearls, points, and future restaking rewards without locking your liquidity. And enjoy countless DeFi integrations for earning easy passive yield. Learn more at swellnetwork.io. Introducing KELP DAO, the first liquid restaking platform for LSTs. With KELP, anyone can deposit STETH by Lido, ETHX by Stater, or SFRX ETH by Frax, and mint a liquid restaking token called RSETH. With RSETH, you can participate in your favorite DeFi platforms and get 100% of all EigenLayer points, plus KELP miles. A fresh wave of restaking is here, restaking that's liquid, rewarding, and convenient. Learn more today at kelpdao.xyz/restake. For most of us, our crypto journey started with MetaMask, and now with MetaMask Portfolio, we can do so much more. MetaMask Portfolio puts you in control. Use the dashboard to see all your assets and balances across your wallets in one place. The buy feature allows us to buy crypto assets effortlessly with fiat options such as PayPal or credit card. The swap feature allows us to swap any tokens anytime by finding a selection of available rates. The bridge feature allows us to bridge between networks including Ethereum, L1s, and L2s based on the best price and fastest delivery time. And with the stake feature, anyone in a few clicks can stake ETH and earn rewards. Do more in Web3 your way with a safe, simple, and convenient tool that's all in one place. Track and manage your Web3 everything at metamask.io/portfolio.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees UX issues are the biggest blocker standing in the way of crypto adoption. Introducing AVOCADO, multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. One gas tank to pay transaction fees on all chains in USDC, and native access to INSTADAPP's powerful, custom DeFi strategies. AVOCADO, one wallet to rule all chains.
All right, let's introduce Paul Veradittakit, managing partner at Pantera Capital. Paul, welcome to the Edge Podcast. How are you doing?
Great to be here, guys. Super excited.
Both of us have been following you and Dan Moorhead for years, so it really does feel full circle to be able to interview you. We're really just going to dig into the OG insights you have, having invested in crypto full-time for at least a decade. I know it's longer, but you've been at Pantera for over a decade. That's a very rare resume to find in this space. So we're going to use the year ahead, which is a fantastic write-up that Paul and his team do at the end of every year. Kind of reflects on all the progress we've made in the crypto space, We'll link it in the show notes. We'd highly recommend you read it from start to finish, despite the highlights reel we'll cover here. And so, Paul, why don't we just kick off with a little more about your background I alluded to. What can you share about, what were you doing before crypto? What led to getting into crypto? And then I'd love to talk more about Pantera and its vision.
Thank you very much, guys. I've been in crypto now for about 10 years. I hit my 10-year anniversary in April, and it's been a wild ride. I mean, things have changed so much. I mean, I grew up actually in Los Angeles, and, my mom's a nurse, my dad's an engineer. I had a pretty basic childhood, and I had a pretty circuitous career or sort of like trajectory to get into both crypto and VC. I went to UC Berkeley, and then I actually graduated from UC Berkeley thinking I was going to go to law school. So I worked in a law firm for about a year and a half, and shortly realized that I didn't want to do law. I really wanted to be in the front of the action. I wanted to do something, business related, something that was a bit more sort of analytical, dealing with a lot more numbers, taking a bit more risk. And so I actually joined an economic consulting firm just to kind of, get the chops going in terms of financial analysis, in terms of research. But, being in Silicon Valley, all my friends were starting companies, and I really wanted to get a piece of the startup world and learn what it was all about. So on the side, I was actually hustling. I was helping to do business development and marketing for a startup and getting paid sweat equity just to kind of, get that experience, going out there, getting partnerships, starting to think about user acquisition. It was a daily deal aggregator site and mobile app. This was back in like 2008, 2009 when daily deals and Groupons or Living Socials were a big thing. And, went out there and even just like went to TechCrunch Disrupt. I think that was my first eye-opening moment where, wow, like look at all these like VCs, look at all these startups. This is the marketplace that happens in terms of getting financing and getting visibility. And, I started to look around for a new job. I felt like, being in TradFi, being in consulting wasn't the place that I wanted to be in. I wanted to be in something a lot more faster moving, a lot more disruptive. And I actually came across an analyst position on LinkedIn. This is sort of like early on before LinkedIn was actually used as a recruiting tool. And so I jumped on the post. It was an analyst for a VC firm that was focused just on mobile. And it was kind of similar to like 2013 when I jumped into crypto, where I was like, mobile, gosh, like there's like barely any. iPhone just came back and came into the market like a year earlier. This is 2010. There weren't that many mobile apps that had much traction at all. I felt like, hey, here's an opportunity to get in early into something that I thought was going to be extremely disruptive. Again, you got the camera, you got GPS, you got all the data on your mobile device. It's a computer in your pocket. And I thought there would be so many awesome applications. And so I actually applied and got into the VC focused just on mobile. And so the cool thing was we started looking at a lot of great companies, a lot of cool consumer mobile apps. I mean, I was looking at like fitness apps before they even hit 1 million downloads, and now they're over like, hundreds of millions and billions of downloads. I was also looking at social networks when they were super, super early. But the thing that really got me that job was the fact that I was able to dive into mobile when no one knew much about it. No one knew much about how you monetize mobile, what are some of the use cases, the user experience, and the last one was around the data piece. We actually built models as Pantera Capital to try to source mobile apps as they were starting to hit inflection. So sort of like the Moneyball for mobile apps. And I learned so much about VC and mobile at the time and made some great investments. But at the end of the day, mobile became saturated really fast. Everybody started playing the data game. People started investing into mobile and mobile apps. And then you started losing to some of the big guys out there, big VCs. So for me, I was looking to kind of find my next gig and find that next edge, that sector that no one was looking at. And I came across this list of top YC startups. And as I was going down, I was like, what is this Coinbase? What do they do? And so I started reading up on Coinbase, started reading up on Bitcoin. And I was like, wow, like Bitcoin is amazing. It's so disruptive. It's a new type of a new type of money, decentralized, store of value, payments. It's something that's just never existed before. It could be sort of financial infrastructure. And if this was going to succeed, Coinbase was going to be in the middle of it. Got connected to someone at Coinbase, thought about joining. But as I was talking to Coinbase, there was a recruiter that reached out. And I was like, hey, do you know anything about Bitcoin? And I was like, I'm just reading about this thing. It's so disruptive. And she's like, hey, there's this firm, Pantera Capital, that's looking to do venture capital in Bitcoin. And so I was like, well, look, I mean, it's still really, really early on. Read about Dan Moorhead, read about his background, global macro. He's got access to capital, super smart investor, looks for tech disruptions really, really early on. And they started making a few early stage bets. I think this was like Circle at the time, Bitstamp, Zappo. And so I kind of went in there and said, I believe that there's a lot of cool companies that need to be built around this infrastructure-wise and also utilizing this technology for applications. And so I came in there with the thesis of what Bitcoin and crypto could do, revolving mostly around how do you get access to it and what are some of the early use cases around micropayments and payments. And to me, it was the perfect fit. They needed someone to really go in there and build out VCs, execute on venture capital, have that experience. And at the end of the day, I mean, for me, like what really got me into Bitcoin was really reading about stories of Wenceslaus in Argentina, or even some of our early entrepreneurs, Sebastian Serrano of Ripio Bitpadros, where they need Bitcoin for financial services. This was their only way to maintain wealth and be able to access different forms of finance that they could never be able to sort of access in an efficient way. So that was really my goal. It's like really like, my heritage is from Southeast Asia, and I could see a lot of unbanked over there. And so if crypto could really sort of democratize finance, that's what I'm looking for.
My immediate follow-up was thinking, like, where does the hunger come from to continue to work in this space? Because you've been one of the few OGs that I've noticed just hasn't lost that hunger. And when you look at crypto, things just develop so quickly. It feels like, the activity that you see over a few years, you'd see in other spaces over like a decade. And part of the space is there's been a lot of upside realized. And as a kid who grew up in a very like middle-class home as well, I have always been able to maintain that hunger. But I've been amazed to watch people just flame out in this space. And I think it's a part of the roots you mentioned there. It's like really understanding the urgency that all of this tech is actually needed. Outside of like, the fact that there's folks like us in the United States who, we totally believe in it. We love to use DeFi. We love to use Bitcoin, all the other Web3 applications, but it's not as urgent that we have it as opposed to like our friends or family that live in places where they just cannot trust institutions, banks, and so on.
Yeah, it's a great question. Look, it's been 10 years. And, when I started in this space, I mean, I was going to conferences and you just saw a bunch of libertarians. You didn't really see anybody that had a technical background. And then once you finally saw some technical folks getting into the space, then you didn't have any business folks to really actually commercialize any of the technology that people were thinking about. And so it's been a long journey to get amazing talent coming into the space, and then eventually VCs to kind of come into the space that kind of make things not lonely for you. You know what I mean? I think being able to learn from other investors, being able to see blockchain and crypto get into other areas of finance around payments, or maybe even consumer, reg tech, energy, all these things that I'm learning all the time. It was just mostly just infrastructure. How do you get cryptocurrency? How do you trade it? And now we've gotten into all these applications, and it's just, I think it's the intellectual curiosity that I have and what I'm learning, and with disruption across all these different spaces that really, really help. I really do think that every single time there's a bull market, there's just more and more innovation and more use cases and more people and types of people that crypto is touching. And, again, there's a lot of downs out there. I mean, when I started in this space, I mean, I'm still like, when it's the bear market, I'm the last VC that gets invited to a dinner. I'm the guy that people are blaming for blowups, you know what I mean? And I'm like the meme out there, but you kind of take the hits and the punching bag with the highs of just like a lot more progress every single time we're able to like go out there with the much bigger market. And I think the only way that you stay in this thing, and that's the same way that we recruit too, the only way that you stay in this thing is you have to be mission driven. Like, what are you doing this for? For me, it's not about money. For me, it's about changing the world. It's really making people like the ability to get like wealth, keep their wealth, and be able to actually just like, not have to pay these egregious fees to all these middlemen that are kind of standing in the middle of like all these like cool things we want to do.
Yeah, I think you nailed it there with the intellectual curiosity aspect. I mean, there's the meme of like in it for the tech, but you actually have to be sort of in it for the tech. There's so many other things that come with this, but yeah, if you're not interested in like the ever evolving space, like you just won't have longevity, I don't think anyway. You kind of answered some of my questions just more pertaining to Pantera, but also just curious, like more about kind of that overall vision of Pantera. Like, how have you managed to stay successful over such a long time frame? I think it's probably some of the things you just alluded to, but I guess also like what differentiates you from maybe other VCs in the space? And you've probably seen the competition kind of kick into overdrive, just like you did back in that early mobile wave as well. But yeah, maybe just speak to that kind of competitive landscape in VC right now.
No, thank you so much. That's a great question. So look, I mean, there's a lot of competition out there right now. And I think the difference between when I was at Pantera Capital and doing mobile there versus doing crypto here at Pantera is we have the brand, we have the resources, and I have the autonomy to really kind of move quickly and do what I can to continue to be the leading firm in this space. And so it's the way that I think about Pantera, it's like running a startup. It really is. I mean, we're in a startup ecosystem in crypto. We're super, super early, and we'll talk about how early we are in crypto. But to build a firm focused on crypto, completely new. 2014, we're the first institutional investors putting money into Bitcoin was $50. Like, we're helping people get Bitcoin through like Bitstamp and looking at other exchanges and OTC and whatever we could, because we were solving a problem that we had, and we felt like investors were having that same problem. So why not go through Pantera, trusted entity that they can sort of get exposure to Bitcoin? Well, what does that look like in the future? We serve two clients. Number one, I'll start with the limited partners and LPs. We really want to service those guys. We want to be the BlackRock for crypto, which means, having a number of products, both active and passive, early to growth, equity, tokens. And our job is really to both produce a financial return for our investors, but also to educate them. A lot of investors these days, I mean, they're not, I mean, we have a wide range of investors. I mean, we've kept our minimums on the lower side compared to some of our larger peers, where you'll run across the street and run across Puerto Rico and you'll run across our LPs. It's not all endowments and foundations and those sort of things. But we do have a mix of everybody. And especially for most folks, I mean, they're not putting 20% of their net worth in crypto. They're probably putting a fraction of what they normally would put into stocks. And so for us, it's an ability for them to dip their toes in, learn about the space, be able to partner with us, be able to network with us, and then be able to hopefully, see the asymmetric upside of investing into crypto, whether it's on the currency side or whether it's on the equity side of things. And the other clientele we have are entrepreneurs. We're trying to create a product to enable us to be the top value add investor for our entrepreneurs. We know that we're one of the oldest. I mean, people are going to say, yeah, you're one of the oldest, the largest, the most connected. But I think that was in the beginning. And we could sort of tout, hey, we've seen a lot. We got a lot of expertise. We serve on boards. We know everybody, but that only takes you so far. I mean, again, like then we're leaning into, okay, how do we make that productivity more productized? How do we scale? I mean, again, we've invested into companies outside the United States. 40% of our capital has gone into companies outside the United States, a lot of them into local brokerages and exchanges. How do we make it a lot easier for people to connect within our network? How do we start diving into new technologies around research, tokenomics? We just started this research fellowship program, bringing a lot of PhDs and college students to really help produce thought leadership. We did this project with Flashbots around their SWELL protocol, their auction protocol, to show, hey, we could have used this protocol to make it a lot more fair for people to get Taylor Swift things like that are super cool. We brought on a head of talent, and we produced pretty much the largest compensation survey for Web3 out there. And then, of course, we're trying to do a lot of things around governance. Like, for us, whether it's serving on boards or whether it's actually, voting, we believe that it's our duty as large stakeholders to really help push forward these ecosystems and push forward these protocols. So at the end of the day, I mean, what we do is we survey our portfolio companies, just like if you are creating any sort of consumer product, you want to talk to your users, and we figure out what are your biggest pain points and how can we service those in a scalable manner. We keep the bar really high for our team. It really starts with our team. I mean, we're seeing amazing talent out there. Compared to other firms, like, we're actually actively hiring right now. Like, we've been very methodical about bringing the best fit, the highest talent. And so whether it's the investment team or whether it's the platform team, like, we are actively building right now.
I badly want to ask you more about just how difficult of a business venture is, but this is probably a good follow-up for us for another podcast.
Oh yeah, there's definitely a longer podcast around how do you build a firm, how do you build a culture, like all the different things that you see with investments, like different scenarios. What do you do? We've even produced like some of the largest M&As in the space. I mean, obviously the Blockfolio FTX thing was a large one, but we've done like other ones, like Chain was another one, Stake to Kraken was another one. I mean, we've done the whole gamut of how do you source, how do you execute deals, and how do you provide value, but then also how do you get liquidity for these things. And so yeah, we've gone through a lot of experiences.
Yeah, it's an exhausting business, and to scale it, I mean, I don't have the answers to that at all. Like that's something that I think very few other than Pantera have looked to do over the last decade. So anyways,
I guess the one line of what I've had to think about is, as we started the firm in 2014, outside of investing, what are all the other things that I do to provide help to my portfolio companies? And how do I take all those things off my plate where I can focus on the smallest of that, which is probably the advice piece. And then everything else, I just kind of move off to a larger team. That's kind of how the way that I thought about it.
So before we start to talk about some of the major themes that Pantera is investing in 2024, can we go to just the basics of what you look for in founders? What sort of pattern recognition have you developed over a decade of investing in crypto startup founders?
I think some of this is going to be specific to Pantera, but some of this is also just, general VC 101. I mean, I think for us, like, before even getting to the founders, I look at large markets. I mean, being a larger fund, you need big returns. You need generational companies. You need the Airbnbs, the DoorDashes, the WhatsApps, like that sort of thing. And so, for me, like, I really look at tremendously large markets. But for some smaller VC firms, may not need to be the case because, the way that you're looking for, how you build your portfolio could be, more sort of like singles and doubles, and you may want to sort of, go after, a certain return profile. But, at the end of the day, for us with a large platter, we do have to at least have some home runs. And so how do you find those home runs in founders? I mean, I think for us, like, it'd be great to find founders that do have experience, especially sort of serial entrepreneurs and ones that have domain expertise. For instance, I remember when we funded Bill Barhyde at Abra back in the day, right? I mean, the guy was like second, third company. He's dealt with payments. He's dealt with regulators. He can kind of get the ball rolling. Jeremy Allaire of Circle, I mean, he, founded Bright Cove, raised venture capital money. So you know that like capital is not going to be an issue. You know that the guy has been able to like go through the ups and downs, take companies public, like that sort of thing. But at the end of the day, whether they have experience or not, it's all about whether these founders are driven and they're relentless and they will do whatever it takes to sort of succeed. I guess two great examples of that would be Elizabeth Rossiello of BitPesa. I mean, basically trying to do cross-border payments using crypto in Africa. And to make that happen, she moved to Nigeria to service like the largest market. I mean, that's like determination, right? Or even like Nikhil and Joe at Alchemy, where we looked at them and they sketched out their vision of what Alchemy was going to be, the Amazon AWS for crypto. And he said, I'm not stopping until I hit the same market cap as Apple. Like, this is going to be $1 trillion company. Go big or go home. This is what it's going to look like. This is my vision. And I was like, okay, like, look, I'm going to try to get you there. I'm going to do whatever I can, but you're going to have to keep that same drive and relentlessness and just pursue that vision. And so I think that's one thing that is huge that we look for in founders. And I think the other thing that we've really sort of realized too is governance makes a huge difference. For the companies that we actually have board seats in, they happen to be our most successful companies. So we really realized that it's better to get conviction, to have skin in the game, and to really actually like help build with these founders. You build up so much expertise and connections. If you can really sort of put those resources to use, it'll make these companies so much bigger. And, the other things that I look for are going to be, if there's a product out there, do people love the product? If you take away that product, will they be, sad? I think those were some of the characteristics that I've seen from some of the companies that we funded really early on. And I think lastly, for investors, if you can find companies that you could add the most value to, for instance, like, we invested into Amber and we're one of their largest customers. If you could be a customer and you could add a lot of value there, if you know that you're investing into layer one and they don't got the BD chops, but you have a huge portfolio that they can connect into, 1 + 1 is infinity. You know what I mean? Like, I think it's just finding the right fit too, and knowing what you're good at is extremely important.
DeFi enables a whole new world of trading and yield opportunities. Sometimes we all wish we had a little bit bigger of a budget so we can make the most out of it. That's why we created Blueberry. Blueberry lets you access the best opportunities on Ethereum all in one easy-to-use terminal. You can access 5x, 10x, or even 20x your money in one click, more than any other lending market, so you can maximize your earnings. Only on Blueberry.
Maverick Protocol provides innovative liquidity solutions for token projects to customize, automate, and incentivize their liquidity with the highest efficiency in DeFi, all powered by Maverick AMM. Why has Maverick become the first choice for all kinds of token projects, from stablecoins to LRTs? As the first dynamic distribution AMM, Maverick AMM provides automated liquidity movement modes which move your liquidity to follow price, keeping it where it does the most good. This enables Maverick-powered pools to process higher volume with lower TVL requirements, and means that Maverick supports the highest capital efficiency for LRTs like WEETH. Maverick AMM also supports non-uniform liquidity distributions, making it easy to concentrate liquidity in shapes that fit each project's individual needs. Finally, Maverick boosted positions maximize incentive efficiency for protocols looking to bootstrap their token liquidity to precise strategic areas of a liquidity pool. Token communities like Lido, Aave, SWELL, EtherFi, and KELP DAO have been bootstrapping TVL and maintaining PEG using Maverick tools. Ready to build liquidity with maximal efficiency? Go to app.mav.xyz/The Edge Podcast today.
Paul, I want to transition to some of the predictions you talked about in the year ahead piece. The very first one you mentioned is just Bitcoin. Like, what is happening on Bitcoin lately? We've got ordinals, we've got BRC20s, we've got this rise of L2s, we've got, we're going to see block times greatly reduce on Bitcoin layer 2s. I feel like we're being set up for like a proliferation of activity, and just kind of curious how you're seeing it. Is it like DeFi Summer 2.0? Is it not? Is it something in between? Like, yeah, how are you looking at this kind of emergent opportunity in Bitcoin?
Yeah, we're monitoring it. I mean, when we look at an ecosystem, we take a look at the macro, and, taking a look at Bitcoin, right, it's got the largest market cap. We're starting to see the possibility for institutional capital coming in. And this kind of goes back to what, DeFi Dad and I were talking about early on. I mean, we've been waiting 10 years for the moment where institutional capital could feel a bit more comfortable coming into this space. And they have checkboxes they have to go through. And, we hope that one of the checkboxes has happened recently. And we're starting to see a lot more experimentation with them in other areas too that we'll talk about. And so combination of the fact that Bitcoin's got the largest market cap, it's got a lot of security that's around it too. It's tried and tested. People have tried to break it. And we have hopefully, some other macro indicators that will bring more capital, decreasing sort of supply of emissions that could really sort of bode well for the cryptocurrency. And so that plus, like, we've started to see a combination of, well, if Bitcoin's store of value, then, another type of store of value is potentially around NFTs. And so, again, with the ordinals and BRCs, like, that's starting to happen. And then, of course, like with Stacks and what they're doing over there, I think there's an opportunity to have a bit more competition around how do you make it easier for people to do the same things that they're doing on Ethereum and some of these other blockchains, to have programmability, to be able to not only do NFTs, which are, important, but like to be able to have a native stable coin, to be able to have native yield, to be able to do things like lending and borrowing and DeFi. Because if you think about it right now, when people think of crypto, they think of Bitcoin. When they think of store of value, they primarily think of Bitcoin. And so Bitcoin is going to be the first cryptocurrency that the emerging markets get into. We're seeing it in Latin America in a fairly large way, that and also stablecoins. But, if they're able to actually, do things with Bitcoin, and I think a lot of this sort of revolves around not only the infrastructure, but also the scalability, to have the transactions cost low enough where you're not paying the same amount for an NFT as you're paying gas costs, then we can actually see this really open up in all markets. So we're starting to see developers building different types of L2s to kind of push, the programmability portion forward, and also developers starting to build really cool stuff around DeFi. And so I think we're still early on. We haven't even hit the Nakamoto upgrade yet for Stacks. And so
I would love to relive DeFi Summer through the lens of like a Bitcoin DeFi or just about any DeFi. Another major theme you talked about in the year ahead is decentralized social. You referred to something like a tokenized social experience. can you just share more about like what are your thoughts on decentralized social? We've been seeing this rising interest in Farcaster. I think as of this recording, they reported something like 45,000 daily active users. We saw a rise in interest probably about a year ago in Lens is when they were having their surge. So yeah, anyways, what are your thoughts on all of this?
Yeah, I think this could be tremendously huge. I think it's going to be a combination of timing, the right user experience, and, just, hopefully the right team that kind of puts it all together. And I do think that, I remember like even before some of these started, I was pretty interested in BitClout and what was going on there, just because you're able to do something so new, right? Being able to have content that is censorship resistant, be able to then have people monetize that content or monetize services without having to go through sort of the middleman, be able to have creators issue NFTs, enhance engagement, enhance monetization, and people building on-chain identity, I think was super cool. But at the end of the day, it's the same with Friend Tech. I feel like both of those were going to be tough going for sustainability because it's still predominantly based off of speculation. And, if you're early on, it's great. If you're late, you get rug pulled, and, the loot just keeps going on, right? And so I do think whether it's, Focus.xyz, which is sort of the new version, or whether it's like Lens, which is taking more of like the Lens and Farcast are taking more of a developer platform type mentality and allowing folks to have the tools to be able to create more crypto native experiences, where I feel like at the end of the day, it's going to be like, where can creators best have a way to monetize and engage their audience and do some really cool stuff that they haven't been able to do before. And I think a lot of that revolves around NFTs, revolves around services, revolves around content in which consumers can really be a part of and really sort of collaboratively create with the creators and generate just a lot more value where everybody benefits and they own their own content and are be able to sort of create on-chain identities and be able to further monetize. I think it's going to I think it's going to take a combination of like getting those right features on. It's probably going to take a bit of timing where, look, people got burned in consumer crypto recently, so they need a little bit of time to kind of just like get back into something like this. And then of course it's that user experience where whether account abstraction or whether it's around like not having to set up your own wallets and all this kind of stuff that makes it, and then fiat on-ramps, all this kind of stuff, I think eventually will all just kind of come together in the scalability where we'll just kind of like hit the ground running. And it might not even be in the US that really gets it started. I actually think, I just went to, Singapore and Korea. They never heard of FTX. Or they discount it. You know what I mean? Like they are way more willing to try out new consumer products, and they have pain points that are probably larger over there to try out these types of products because of just like enhanced controls and that sort of thing. So I do think that it's going to happen, and I hope it happens with one of the platforms that are already out there.
Paul, another one from your piece is, I think you call it this cross-pollination between Modular and ZK. Can you break that down a bit for us and maybe just speak to like what you see happening with that?
Yeah. No, I think, look, the easiest way to sort of think about that is, we are seeing a lot of modularity right now. We're seeing Ethereum getting broken down into different pieces, and those pieces becoming a lot more efficient and a lot more decentralized. So everything from, storage with data availability to maybe even like, decentralized sequencers and even L2s and all that kind of stuff. I think we're starting to see the same thing happen with zero knowledge. We're starting zero knowledge proofs to be able to focus on certain verticals such as, co-processing, privacy, for instance. And this isn't even one of our portfolio companies, but, we think it's interesting. Axiom and their ZK co-processor, whereas basically using zero knowledge proofs to provide historical state proofs. And this could be used for developers to, perform computations in different apps. So it's really like taking one vertical and really sort of using zero knowledge to focus on that vertical, and then creating a platform out of it, where it could be interoperable across a whole bunch of different applications. Another one that is fairly obvious that I think a lot of people are focusing on right now is around like identity. So imagine being able to like use zero knowledge proofs to preserve identity, privacy, and be able to use it across a whole bunch of different applications. Or even like, I think another one that we came across recently was around, I know, enterprise blockchain has been talked about for a long time, and we don't want to go back to the R3 days, but there is a lot of innovation that's happening right now with banks, especially outside the United States, trying to tokenize real world assets, or trying to increase efficiency around bank functions and sort of data, sensitive data around that. So to be able to create sort of semi-permission blockchains and use zero across different, across different banks and things like that could be sort of interesting and provide a backbone for, other sort of applications to be built on top.
Paul, you kind of led us into this idea of institutions getting exposure to crypto. We're starting to work with tokenized assets. This is, again, another sort of theme that you guys walk through in the year ahead. And so, yeah, I guess, like, what else can you share around, maybe I'll call it the real world asset, RWAs narrative. One of your portfolio companies, Ondo, has been at the forefront of tokenizing treasury bill yield. And so that's been exciting because rates have been high and there's actual demand for that. What are you thinking, like, as we're still in an environment with high rates, there's a likelihood that we'll see rate cuts this year. I'm thinking about the whole RWA space, but more specifically Ondo and this like dependency on T-bill yield.
Yeah, I mean, we look, I mean, RWAs have been around for a bit. We remember T0 back in the day and tokenized stocks. And at the end of the day, I mean, what I learned about in investing in crypto is you may have the space right. You likely may have the space. You likely may have the time wrong. And so we do feel like there's tailwinds now for real world assets. And part of it is really just, the infrastructure and scalability, and also institutions. And also I think the macro thing is really important. After tokenized stocks, we talked about like, tokenized royalties and all this kind of stuff. But I mean, one of the big things that has happened is rates have gone up and people are getting to benefit from that, but not everybody. And so what if you can have tokenization, bring enhanced liquidity, democratize ownership, like better transparency, lower cost than the legacy systems? Now you're able to have these treasuries be accessed globally, be traded 24/7, and be interoperable in DeFi, which is great. You know what I mean? It really opens things up. And so, we've seen tokenized treasuries go up like, 7x in 2023. Ondo was really like at the forefront of all of that. And, I remember going to Korea and Singapore, and all they could talk about were RWAs, like family offices and institutions wanted to get a piece of that. And so, I think what Ondo has done is really just kind of spur $850 million of US treasuries on chain. But I think what they've also realized is going through the going through the regulatory side of things, both domestically and institutionally, to kind of figure out how to offer these in a compliant way, but also to do so in a way that has enough liquidity so that it becomes really interesting and usable. And so I do think that tokenized treasuries are a start. When rates go down, I'm sure there's going to be other things that folks kind of move into, and probably things around, stocks could be one thing. We might start seeing things around like real estate yields. We might see things around like tokenized funds. And so I think this is really just a case study and a process to really kind of get a lot of different types of.
What about stablecoins? I'm curious that we haven't talked about stablecoins at all yet. It's still like one of the ultimate killer use cases for crypto. There's actually a new wave of stablecoins that are coming where you have perps shorting ETH. And in this case, I'm referring to, there's one called Athena Labs, which is in beta. There's another one called Flat Money that we just learned about that's coming as well. So clearly there's a model here that allows you to arb this yield and hold a stable coin. Any thoughts on that, or just stablecoins in general, maybe the opportunity that it still presents?
Yeah, look, I do think that stablecoins are hugely important. I do feel like we've already seen potentially a winner around fiat-backed stablecoins, at least in the US, USDC, and that's done very well so far. We'll see what happens in terms of whether there's going to be fiat back, like every sort of fiat is going to have a backed stable coin, but obviously people point to the US dollar, and those guys are doing really well. And I think, in terms of payments, something that is pegged to the dollar is likely going to be used for cross-border payments and money movement. But really do feel like there are other types of stable coins as you sort of move from, something like USDC that's a little bit more centralized to things that are a bit more decentralized, not even all the way to like algorithmic, but really just like, hey, like Circle's obviously making money off of, taking the yield, and what if you can give some of that yield back to users? So I think that's what Ondo's trying to do with their stable coin. I think there's some interesting, I guess you call them like safe ways to kind of give back yield to users. That could be things around like staking, liquid staking, like things like that. We've seen the Origin guys do a stable coin themselves around underlying yield, and then you start getting into like more complex strategies like what Athena is doing and things like that. And so I think those ones are ones that I think are ways to store value for folks that are just a bit more crypto native and kind of want a little bit more juice, right? And still can be interoperable within DeFi. So I think you're going to get that range out there where, the safe and steady use for payments centralized to, hey, like native safe yield in the middle to, hey, we want a little bit more juice. And folks feel like you can't kind of mess with the yield. It's a bit more algorithmic. It's meant to sort of like do what it can to sort of stay stable. And that's kind of the ethos that we want to sort of be facilitating within our decentralized application and things like that. So I think there's going to be stable coins that kind of fit all different types of parties, depending on what you are sort of looking for.
Paul, so another prediction or theme that you talk about in that year ahead piece was AI and DePIN. We kind of touched a bit on some of this stuff through Axiom, some of this like off-chain computation that's happening and coming on-chain via ZKs. But there's also like a lot of computational intensive applications coming on-chain via AI and DePIN. What are you thinking about? I mean, I'm really excited about DePIN, but I'm trying not to get like absorbed in the hype. It seems real this time. I feel like we've seen DePIN almost before, but repackaged as something different. But yeah, how are you seeing kind of this reemergence or new emergence? And I guess even more broadly, Pantera, how's Pantera looking at this space?
Yeah, look, we haven't done too much on the AI side, on our liquid side of things. We did Tau, we did BitTensor, we also did a bit of render, and I think we looked at things like Akash, and I think also on the DePIN side of things, like still early on. I mean, I think for us on the AI piece, if you can really have better data and better models by democratizing those pieces, then I think it could be really interesting to sort of, to have just better artificial intelligence applications. And so if tokenization, or if tokens can really help to provide better data, better models through, again, the use of human capital, and I think that's kind of what we're looking at. That's kind of what we've made bets on. And I think on the DePIN side of things, I think while there's a lot of different use cases out there, we really want to make sure that actually having a decentralized physical network, whether it's something like Helium, whether it's like weather data, whether it's whatever, there's actually a need for it. Like, this data is orders of magnitude more valuable if it is more decentralized, and that people are willing to pay for this increased accurate data, etc. And so if we can kind of understand the commercials around a DePIN use case, then, that gets us really, really excited. But, what I was mentioning is, a lot of this is going to be able to be on chain because we have, Solana and other blockchains that just have like super high throughput. And does it matter? I mean, at the end of the day, I do think that there will be use cases that it really does matter. I mean, especially if you look at use cases that deal with regulations and you want to be able to know that the data is real and that, is sensitive, and you can use zero knowledge. Maybe things around like gaming, you really want to sort of have that high throughput, see it on chain, be able to, have the game iterate based off of the data that's happening right there. Or maybe in things like prediction markets, where it's like wanting to make sure that there's enough transparency to sort of see that, the results are actually happening and people are getting paid out, and, there's no like, intermediary that's just sort of keeping things under wraps. And so I do think that, we have the ability on the infrastructure side to provide that transparency and compute all of these intensive applications. So I'm excited about what can happen.
This is probably a good spot where I want to run through a series of questions, which they probably all deserve like 5 to 10 minutes of conversation, but we're going to put you under the pressure to try to answer these in like 30 to 60 seconds. To be honest, I feel like each one of these like deserves a whole podcast, but while we've got this precious time with you,
sure,
I've got to ask you some of these questions. So
yeah.
First, if folks check out the year ahead, in the blog post, one of my favorite like charts or diagrams is the way that you guys lay out this phase 1 versus phase 2 in the bull run. And you specifically call this out for Bitcoin, but you can apply it to all of the altcoins as well. So just really quickly, phase 1 for folks is the early stage of the rally when Bitcoin has tended to outperform the rest of the market. Phase 2 is the later stage when altcoins have tended to outperform. where are we in phase 1 or phase 2 in this bull run?
I think we're still in phase 1. I mean, we had a pretty awesome event that happened recently, yet I think the market's still sort of adjusting to what that means. I think there's still a lot of education that needs to be sort of had for folks to kind of let people know that it's a lot easier to get into Bitcoin right now. And then, of course, you have the halving, the election, and then rates are still high. And so I do feel that, and then throw in like the fact that there's, going to be new infra and use cases for Bitcoin. I feel like Bitcoin hasn't had its moment yet, and we're still just kind of waiting. And so I think until that happens, then we haven't really gotten to phase 2 yet. So I think we're still early phase 1.
Okay, next question. Will we continue having these 4-year cycles?
I do think there will be probably some interest in Bitcoin every single time there's a halving, but I think the effect will probably decrease every single time. I think there's more education, there's less volatility in general than there was beforehand. There's more adoption. So I do think this year is kind of special though, because you have a combination of, there's ETF, and then you also have like the potential increase of demand mixed in with that, decreased supply mission could make this year a little bit special. But I'd say in general, like every 4 years, it probably gets lessened.
Okay, I have probably dedicated more of my time since being in crypto to Ethereum. I don't think it's like any secret out there. Do you feel like Ethereum is going through like an identity crisis? Like, I'm curious, like, do you draw any parallels to any other cycles in terms of the identity crisis it may be going through? And then I guess maybe the main takeaway from this is, if it is having an identity crisis, are you bullish on LRTs to inject some new momentum into ETH as an asset?
Yeah, I mean, I feel like I think this is pretty predictable, and I don't know if we've seen another cryptocurrencies that's gone through as much of an identity crisis as Ethereum, but I do think that it's a good thing. I think it's great that we're still talking about Ethereum. EVM is still strong. At the end of the day, I mean, I feel like the modularization of Ethereum really just increases the addressable market for Ethereum as a settlement layer for blockchain transactions. And, along this way, I've seen at least like, because I look at, market caps, but I also look at like the developers, and there's more concentration of developers, at least within the Ethereum ecosystem, L1s and L2s, and things that are just like in that sort of sphere. I think that market share has been higher than ever during the last year for Ethereum. And I really feel like, it's, and then the competitors are going to come through, and, we know about those competitors, parallelized EVMs and Solanas. And while I think certain categories will make a lot more sense for those, at the end of the day, those are going to bring more users that will try other types of blockchain products, and it'll just help Ethereum in general. I mean, it just increases the pie. And so I think the combination of the fact that the infrastructure ecosystem has gotten so much larger, there's more use cases that Ethereum can tackle. That, in addition to, as you know, I mean, proof of stake, the deflationary currency. I think if ETH will do well.
Yeah, it kind of reminds me a little bit of what Bitcoin might have gone through during DeFi summer and a little bit after that. I just remember that folks became openly bearish on Bitcoin. Not the Bitcoin community, but I'll say the folks like myself who kind of sit across multiple blockchain communities. You started to look at Bitcoin and say, like, it does so little, and it takes many years of being in the space to understand that, like, every one of these blockchains tends to offer its own utility. There's a lot of overlap at times, but like, for example, what I was criticizing in Bitcoin back then was part of what makes it so special, that it does this very narrow scope of utility. And that's what makes it so powerful as like a meme, as a store of value that has this recognizable global brand. which kind of leads me into our final rapid fire question. Where do you allocate more of your time and energy these days? I know that the short answer is Pantera invests across ETH2s, Solana, Cosmos, and all these other like mega sub communities that really you could probably spend all your time on. So I'm just wondering, where do you prioritize your time and energy?
That's a great question. I mean, I used to do a ton of diligence on every single deal that we do. Now I spend a lot of my time really on a high level, helping to build the firm, helping to sort of think about how do we execute on our vision and how do we put people in the right places to execute on that vision. I also spend a lot of time helping on our portfolio companies that have board seats on a lot of the brokerages and exchanges, Ondo, like Alchemy, like Starkware, so developer tooling, scalability, all that kind of stuff, just to basically oversee some of our largest and most important investments. And then I actually just do a lot of education, the Veradittakit and the blog. I mean, spend a lot of my time on, but especially around, and I'm on sort of like the spaces that I still do deals on, or at least I'm most involved with, probably around the infrastructure and consumer side of things. I really do get jazzed that I can actually talk about certain products to my friends. And so if we can get Bitcoin more in front of the regular consumer, I think is interesting. And then of course, on the infrastructure side, the first thesis that I did at Pantera was really going out there and investing into the Coinbase of different geographies. And then from there, I mean, being able to then get institutions into crypto, which is what we're doing with Ondo and EDX and all that kind of stuff. And then I think, have an awesome team to be able to focus on other areas. For instance, like some really like AI, some really like scalability, dev tools, some like security, and some like DeFi. And I think at the end of the day, while we start gravitating towards being passionate and interested in certain areas, we're all generalists here at Pantera. And so, we don't know what areas are going to take off. And so we have to continue to broaden our horizon. We do these thesis sprints where we kind of come in, everybody brings a thesis, everybody shares their view on it with the data to back it up, poke holes in it, and we challenge each other. And then we kind of go out there and execute on a thesis if we're still excited about it, whether it's yours or whether it's someone else's. So that could include Ethereum, Solana, Cosmos. It could include Sui.
This is a good spot then, I think, for us to wrap up, guys. So I want to first remind our listeners that they should learn about Pantera Capital at PanteraCapital.com. You're going to want to follow Paul here. It's just his last name, which we'll put this all in the show notes. You can follow him on Twitter. You can also follow the Pantera Capital Twitter account. It's just Pantera Capital. And then be sure you check out his weekly newsletter. It's very cleverly spelled out as like Veradittakit.com. We'll put that in the show notes as well. And then Paul, other than just thanking you for really spending some quality time with us and talking in depth about some, again, really challenging topics, I'd love to give you the final word. Is there anything else that we didn't get to cover that you would recommend crypto investors get leveled up on or do some more digging into?
No, I think you guys covered all the hard questions. Hopefully I did well. And I would say all of those resources that you mentioned, your podcast, my blog, Pantera website are all ways to get educated. I just say, hey, go out there and try products. That's the best way to learn. When you talk about a new product and you do a great job of outlining, hey, how do you actually walk through a product? How do you actually do certain DeFi stuff? Just go out there and try it. That's the best way to learn and best way to fail and succeed. So, that's kind of been the story of my life too. I mean, I've been just like trying different things and figuring out like what works.
Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.